What up, everybody? Welcome to the watch list of September 2nd. This is the beginning of September, so this is September's first watch list. I think September should be a magnificent month to trade. August was pretty rangy to end it, as you would expect. August typically gets very consolidative, like it starts to range a lot in August, and it's not usually the best price action, but now we're entering a new season, and we're coming to the end of third quarter, and I just think that this is going to be a very big month, and so I want to prepare us properly for that month. But just understand September historically is typically a very bearish month. Like it's the most bearish month of the year historically. So I'm not saying we're gonna be bearish, but I need us to be looking out for bearishness. Like don't be surprised if we do go bearish. And I'll tell you my exact thoughts based on the chart. That's all I base my direction on is chart-based analysis. So I'll go over all of that in this class right here. But first, let's talk about last week, right? Let's talk about the last week of August. I typically pick one day that I feel like had lessons I could teach from, and it's usually from a play that I took. So we'll talk about this play that I took when I live traded my mentees. Now, my mentees have heard me break this down before, but anybody else hasn't. So mentees, if y'all feel like y'all heard this already, listen, relax. Okay, we better break down the play that we took on the live trade on Wednesday. All right, so first and foremost, we were in a range in this time period, and like dealing with rangy conditions is not easy. This is what this range looks like on Nasdaq. We're not really like going aggressively in the upward direction or the downward direction. It's very choppy. And if you were to look at ES in the same time period, kind of want to pull up ES, but I don't want to ruin this. ES looked even choppier than this. Like ES was even worse. So Nasdaq and the SP 500 were both super range bound, and so the expectations were low. Plus, it's August what 28th at this time. Like we already know August is supposed to be range bound conditions. So now here, if you look at the hourly, this is what we were dealing with. We had on the day before, which would be Tuesday's price action, right? Yeah, peep how we had swept sell side, meaning you see this, look, you see these lows? Hold up. All right, yeah, I see these lows right here. Notice price came down, ran those lows, and you see this wick? Yeah, that wick is because it got bought right back up. And that's actually after touching this very important daily fair value gap that we've been watching. So we did call for this to happen, but price went energetically to the upside, but then it didn't have enough to kind of take us way past these highs and show a level of displacement or aggressive energy over these highs. And so the next thing you know, we come back in and we're just trading kind of in the middle of this range, and that's where we're at. And so typically when you see that, it's not really good to trade on the inside of this range, because that means that if you were a bear, if you were somebody that was bearish, price didn't continue in your direction. If you were somebody that's bullish, price didn't continue in your direction, and now we're smack in the middle. And usually what you need to rely on in these time periods is time frames above the consolidation. So the first lesson I want you to take from this is, if you're stuck in consolidation and you don't really know where you think the market is going to go, because like, yo, we're sweeping both sides, we're not really going nowhere, like take a deep breath and then go to the time frame above and figure out where they're trying to get to, because guess what, they're still going to get to their destinations. You just need to be patient for us to break this range. So for example, this daily bullish fair value gap is something we were trying to go bullish on. That's part of our analysis that I gave in last week's watch list. And so, price could come down here, but you shouldn't get too bearish if you see price coming down this low, because understand that this purple area is still a valid area where it could take us back above these highs. And I'm getting that from the higher time frame now under this purple area, meaning if we were to get a daily if we were to get a daily closure under this purple area, closure, with the camera at closure, not wick. Stop looking for wicks. If we get a daily closure under here, then analysis may change and we may have a different bias. But as long as bodies is holding this purple area, I told y'all I'm remaining bullish on the Nasdaq. And so even though we're in consolidation here on the hourly, I'm not anything to the downside. I feel like it's gonna get bought up. So keep that in mind. Now, what did I say on this day? I actually sent this to the free community as well, when I said this is the day where I said above these highs, I would expect a continuation into these highs. I said, but below this red wick, I'm expecting a continuation to these lows. And so that's just me looking at this as pretty much a line in the sand. And so I know if we run these lows from Asia, we're going to continue lower. If we run these highs, I would expect a higher continuation. So that was that analysis. Now let's see what ended up happening. You see price came up this high. I didn't set analysis at, what was this, 3 a.m.? I said analysis at 8, so hold up. 7, that's the 7 o'clock candle, that's the 8 o'clock candle. Okay, so this is what price looked like when I sent the analysis. So I said if we run above these highs, I expect higher. If we run below these lows, I expect lower. I wanted to show you this part because it's just further showing you guys that, man, price does not always go for the top of some wicks. So people who had limit orders right here to take profits, if they were in buys, they never got their orders filled. Right? So they all their profits got taken back when price came back down. And so I always say the most conservative target will always be the highest body of the swing point. I will continue to repeat myself every week until y'all tired of hearing me say that. All right. So boom, price comes to the highest body at this swing point, comes back down. Very tough for people who are in buys. Now we're here, and you guys heard the analysis already. So now let's see what happens. This is the 8 a.m. candle. And then let's show the 9 a.m. candle. All right, so yeah, so the 9 a.m. candle happens and we run these lows. So now the plan is in effect. As I said, if we make it past these lows, I'm looking for continuation into these lows. So the plan is officially in effect. Now we're on the charts at this time, me and the team, and we're noticing that we're stuck in consolidation here. And so, you know, at this time, although I had that morning plan already drawn up, even I was doubting myself a little bit at this time. Like, I don't know if I necessarily trust that bias anymore, only because of the way the price was moving. And I understand that it's August. Understand? So basically, the reason why I doubted myself at this exact time period is because I'm like, we're chopping around in real talk. We've been chopping for the past, let's say, literally like 45 minutes. So I'm like, all right, maybe it's not going to go anywhere today. So then I was kind of not feeling it. But then here's how I knew that price was actually ready to move. So let me show you how I know price is ready to leave consolidation. And we tried a couple scalps in here that did not work out. So there was a couple scalps. We lose a few points at a time, nothing major. But then here's the play that we actually catch when price is ready. So look, what you want to look for when price ready to break consolidation is a couple things. Obviously, you want to see that if you have a downside bias, which we did at this time, you want to see bullish PD arrays getting invalidated. That's one thing you're looking for. Like, all right, you're looking at both sides of the market. Like at the bullish side, you're also looking at the bearish side, as well as you want to see bearish PD arrays getting validated. Let me remind you what PD arrays are, though, because I'm using terminology that some people might have not heard. PD arrays would be anything that you can use to take price in a certain direction. So, for example, let's just pretend I wouldn't really validate this necessarily as an order block, but let's just pretend this is an order block, right? There's not an order block I would look for typically, but let's just pretend it was. This would qualify as a PD rate because it's something I'm looking for price to tap into in order for us to go in the opposite direction, right? So this is a point of interest. It's a PD rate. It's something that we could use to take us somewhere. All right, so I'm looking at bearish PD arrays to start working, basically to tell me that we're going in a direction, because typically in consolidation, you will have, let's say, like bullish fair value gaps and bearish fair value gaps that are both not working. And both of those are PD arrays. So it's like the bearish side is not working and the bullish side is not working. Why? That's because price is consolidating. Stop trying to trade this, and you need to wait for actual trend. How do you know trend is happening? Trend is happening when PD arrays are working. Trend is happening when PD arrays are working. All right, so look, we watching to see when these things start working, basically. And so what I noticed here was, all right, I love the movement because we're getting fair value gaps. So now I'm interested in price action. I'm interested in price action because typically if we're going to lose these lows, let me highlight it. See these lows right here? Boom. If we lose these lows with fair value gaps, that's convincing. So that's my antennas are up. At this point, I'm interested in getting into a move, but that's not enough for me, because in consolidation, sometimes you see these major sells and then it just gets bought right back up, and it's just like we continue chopping around. Y'all know what it's like. We've all traded chop. All right, so I'm laser focused on how do we trade with these same fair value gaps. All right, so price comes in and I needed to reject the lower end of this fair value gap for me to be convinced. Okay, you know, man, my mom called me. I'm about to ignore my mom's phone call for y'all. That's how y'all know I love y'all, man. Let me just text her, tell her I'm running class. Let me tell her, look, class right there. Can't believe I'm ignoring my mother for y'all. Y'all know y'all. Come on, man. That's crazy. So look, so we reject the lower end of this fair value gap. Boom. And here we go. Here we go. So we like what we see here, right? As long as price rejecting the lower end of this, I'm interested in this play. Now, what do we say is bearish confirmation? What do we say is bearish confirmation? We said bearish confirmation is not just simply rejecting the fair value gap. Y'all gonna miss this part. Y'all gonna miss this part. Look, it's not just rejecting the fair value gap. It's when you reject it and soon after you make another one. That shows you, oh, we may be in some bearish order flow. So boom, would you look at that? Oh my gosh, would you look at that? So when this happened and I seen that price had respected this one, y'all forgetting, we rejected this one. Shortly after, we created one that's getting rejected again. Boom, this is where I get into the play. I get in at 57 or 47, one of them. I think it was 47. Once I seen this rejecting, that's when I got in, and I got in right here at these lows. All right, so now that I'm in at these lows, what is my thought process? Literally the same thing. Like, I want to see a fair value get created. So I'm in the play at this point, right around here, and you want to see what I'm looking for fair value gaps. I'm literally letting fair value gaps guide me and let me know that I'm on the correct side of the market. So boom, this candle opens up, creates a fair value gap. Now this fair value gap right here becomes a line of defense. It becomes a line of defense. And so what happens? What happens, right? Why did this fair value gap work out for me? Why did this work out for me? Because we're in bearish order flow. And when you're in bearish order flow, all of a sudden, it's like magic. All of a sudden, bearish fair value gaps start working out. Yeah, I did text her, Nosy. I mean, Noel. I did text her. And Lady Cuz, I got her. She got the message. She know what's up. She know how we go. She know how it goes. So look, all right, so boom, we rejected this. This when I seen us reject this, I said this on the live trade. I said, yo, if we reject this, we're good. Like, we good on this trade. It's over with. And then y'all see what happened. So you could tell we're in bearish order flow. So the signs came from all the way up here. We're looking to see, like, hey, when are we gonna actually pick a direction? We'll pick a direction when PD arrays start working consistently, not just one time, but like 2 times at least. Then you can say, all right, we may be picking a direction. But personally, I will say this as a word of advice. If you're gonna trade inside a consolidation, I would only take maybe one trade inside of it. So like, you know how I was waiting for order flow to really show me confirmation of order flow, basically. I would only try a trade here one time. I don't want to take too many trades on the inside of consolidation, you know? So I tried this one out and then it worked out. And so we're obviously in this play now. And the first place that we trimmed is right here. Now, let me show you what right there is. And I'll show you guys why we trimmed it. So let's keep in mind, right? Let's keep in mind that we're in this crazy range. We weren't moving aggressively to the upside. We have not been moving aggressively to the downside either. We're in a range on the hourly. And so although I see the order flow has finally shifted in our direction, we like that. How do you know price not gonna do this? How do we know that price not gonna come down and just do this again? Bro, it's August. There was no news on this day. That's the other thing I forgot to say. There was no economic news events. So you got to stay humble. And so I say, yo, I like to look at the 50% of a wick as a place where I could take some profits. All right, so that's exactly why we took our first level of profits once we hit that wick. All right, cool. Profits taken there on one contract. Just trimming, just a little something, because I'm truly convinced that we're gonna end up running lower, especially with the way that we took that low. Like, because to be honest, if we were gonna bottom out there, we would have bottomed out pretty much on the yellow line. We wouldn't come under it for the most part. If we came under it this low, I already know we're gonna hit the actual. Let me show y'all. I already know we're gonna hit the actual bottom of the wick right there. That's 50%. 50% of that. Yep. Thank y'all in the chat for answering that. Yep, that's 50% of it. So you can like measure that and take that. So that's a little target for y'all. If it's at a swing point, like this wick was at a swing point, then that's why I was looking at 50% of it. All right, so that's one thing. Now I'm still in the play with majority of my position because the way that we took the 50% of that wick, I'm looking for a continuation, right? Especially how y'all notice what we took away, right? Lo and behold, those very beautiful fair value gaps. Don't you love them? Don't you love them things? When you get more knowledge on them, you'll really look back one day and be like, how did I trade without these things? I promise you. So, you know, lo and behold, you know, we consolidate around here. We're still in our trade because although we invalidated this one, I already told you, and this is 15-second, mind you, right? And so I'm not necessarily concerned with this at this exact moment because the hourly already told me we're going to come to the second yellow line. Why did the hourly tell me that? Because we traded past the 50%. We came this close. I already know anything to the upside is going to get shorted. We didn't come this low not to run the yellow. Let me show you the 1 minute view of this as well. Typically, I like to have 2 lines of defense anyways. And so if I'm looking at the 1 minute as well, not only do we have that fair value gap right here in the middle, but you have this green candle, that green candle. All right, so that green candle constitutes as what we call a continuation OB. And all that is really, to make it very short, is when price is what we call spooling. Notice, yeah, spike. Spooling is when price is moving extremely aggressively in one direction, as you can see, right? Typically when price is spooling, we tend to respect green candles on a sell-off. And when it's rallying, we tend to respect red candles. And so on the 1 minute chart, I still have this green candle as a line of defense. Like if we closed over this, then, you know, maybe I'll start thinking, hey, maybe it wants to make a deep retracement. But this got respected, so there was no reason for me to take profits on the rest of the position. But even if it did, we already took some profits off at the yellow line. And so that's why I tell y'all, like, man, I'm not somebody that's going to teach you don't necessarily have to hold your full position for the entirety of a move. I recommend that you trim along the way. That's what real traders do. Real traders trim along the way at probable spots for potential reversals or retracements. So the halfway of that wick, oh yeah, that's a good spot to trim. After we run sell side down here, which is this yellow line, that's also a solid place that you could trim at, right? Now, there are some times where I'm extremely convinced that we're going to keep going lower, so I'm not going to trim. Those are, for some setups, are just way too good, but for majority of your plays, I definitely recommend trimming. All right, so that's for one. Now, anyways, yeah, see, so next thing you know, price starts running down, so like I said, there was no reason to sell, and all you see, everything's being respected, right? Look at this. This is called spooling again. Look, this retracement rejected the bearish fair value gap, drops off. This retracement, y'all don't see, but it did, right? Let's zoom in so y'all really see what's going on. You see this green wick? This green wick rejected the bearish fair value gap. That sensitivity is something I'm watching closely. That sensitivity shows the intention of the market. You have to look at it like this. It doesn't even have enough energy to move higher into this fair value gap. Like, it's so bearish. It's so bearish that it'll touch this thing to the exact tick and just drop off. That, my fault. And just drop off. That right there is telling you all you need to know. All right, it's telling you all you need to know. So this is what we call spooling. Look, this retracement, the very first PD array it met was this bearish fair value gap. You can see right here. Rejected right before the 50%. Those are things I look at. Those are things that are showing me real intention behind what price action is doing. And so we continue to drop. Obviously, we hit the second target here as well. And then here we are. What is this? 4H opening. Well, this was my analysis at the time. And as you guys may know with TradingView, they're showing you what happened by the end of 4 hours. So because I pressed the 4-hour chart, it looks like we're down here, but we're not actually down here yet, okay? Everybody, we did not get down there yet. So I want to make sure y'all know that. Technically, where we were just at in this replay is right up here, okay? We're right up here. Now, why did I aim for this? Because I felt that if we're going to come down this low and there is a 4-hour fair value gap right here, right there where I wrote 4H opening, see? If that exists there, price is not going to come and run this wick to not tap into this. So whenever there's liquidity next to an inefficiency like this, I'm gonna aim for price to at least tap to the inefficiency. So that's why, even though we ran the red wick, right? Even though we ran this wick, I felt price more downside. This is all during the live trade. You're talking about this. I felt price had more downside because of this 4-hour fair value gap. So I'm still in my play. I'm holding everything because of that. I'm like, we're not just gonna run this yellow wick to not tap into the 4H BTSMC. And look what happened when we ran the wick. When we ran the wick, what did price do? It came up and it rejected a fair value gap. Things like those are things I'm looking at. So understand that I'm letting the PD arrays guide my hold. But right now I'm showing you how to hold the trade right now, if you can't tell. So I'm telling you guys how I know to, like, what I'm using to guide my hold. I'm holding my trade not based on, oh my gosh, I'm up $3,000. I should, oh my gosh, I made 50 points. Oh my gosh, I'm up 100 points. No, bro, relax. Just let the chart talk to you on how long you should hold your trade. Have the understanding of when we're bearish PD arrays will continue to work. And when you're bullish PD arrays will continue to work. That's it. So as long as my bearish PD arrays are continuing to hold price, I'm continuing to hold my trade. That's keeping it super simple. So as we ran a target, see, we ran the second target. As we ran it, guess what? Price came up and rejected the fair value gap. Okay, so what am I selling for? Maybe if we would have, invalidated this, I would have definitely thought about taking some type of profit. So, but like, we rejected it, so what am I doing? And let price talk to you. Let me show you some. Notice as we came up here, we simultaneously made a bullish fair value gap. So there's some people who really were like, who might have tried to take a buy right here. They might have said, oh, bullish fair value gap, I'm in buys. They're not paying attention to the bigger picture. And so when you understand where the higher time frame is going, it'll let you know which one to pay attention to. Because I'm sure some of y'all might have looked and said, yo, but Rel, there's a bullish fair value gap right there. Why didn't you take buys on a bullish fair value gap? Because I'm paying attention to the higher time frame. Higher time frame is telling me we're going lower. So I'm really focused on this. Now, if price would have proved me wrong and used it and continue higher, hey, cool, you got it. But my expectation and my focus is absolutely on the bearish PD array, not the bullish one. Why? Because of the higher time frame. But notice that I'm using the 15 seconds to guide my trade. I'm using the 1 minute to guide my trade. I keep my eye on every time frame. Like, I don't just be in a trade just strictly staring at one time frame. I'm constantly surveying other time frames. Like, real talk, the 5 minute is kind of self-explanatory. 5 minutes self-explanatory. It's not really to say that. I like the fact that we had made a fair value gap. So during a live trade, I look at the 5, like, yes, I like this. This is a good sign, making a fair value gap right here. All right, cool. And I'm watching other time frames. I'm looking at the 1 minute. This is what we call the AMD. I've told y'all about that. Free community, right? We talked about this setup when we run above consolidation and then aggressively move in the other direction. We talked about that. So when I see an AMD setup happening like this, oh yeah, I'm definitely seeking my bearish targets on the higher time frame. Absolutely. I know we're about to move aggressively in this direction. Exactly. And so that's what we're doing here now. And then, like I said, I'm just constantly scanning time frame. So anyways, we continue on this trade, and I want to show you something too. All right, so we love the fact that price rejected this and came down. It's like, okay, we're so close to our target. And then would you look at this? Price makes this retracement up here, and it's very easy to get nervous, right? It is easy to get nervous if you don't know which highs are important. So I know last week, the mentees and I really were like, I was honing in on teaching them which highs are extremely important in the market. Which high do you expect to not get invalidated? If we're bearish, this high will hold. And by hold, I don't just mean wicks, I mean bodies. If we're bearish, we will not close over this high. And so I'm watching this high very closely. And mentees, y'all know why, because we went over this last week. If y'all could tell, this is exactly what we talked about. And so this is why this high is extremely important. So as long as we are bearish, this high will not get closed over. All right, and so that's why we wicked above it, came down, and look how strongly we came down. My goodness, oh my gosh, right? It got crazy. It got crazy. So why are we still holding our trade? We're still holding our trade because that's real market structure. This isn't like traditional market structure. Yes, technically with traditional market structure, they may be looking at this high as well for like with a change of character and all that stuff. But I could show you a bunch of quote unquote change of characters that didn't hold because they're not important highs. And that's why I don't do traditional market structure, because there's a lot of traditional market structure that doesn't actually hold. If maybe you guys have experiences with it, how many of y'all trade breaker structure change of character and you'll notice price changing character 3-4 times in a row and you're like, yo, what's going on? Like, oh my gosh, I don't know whether I'm supposed to be bullish or bearish and stuff. And I felt the same way, and that's why I don't trade that market structure. But I know which highs are actually important versus which ones are not. So I don't validate every little change of character that's out there at all. All right, now, anywho, we dropping off. I think this is self-explanatory, real talk. All right, so now that we got to the second area I'm looking to take profits at, which is we're inside of the 4-hour bullish fair value gap. Now here, this is where price starts chopping like this, and then it drops off. I'm like, all right, cool. I like the fact that we rejected this fair value gap. See, we rejected this fair value gap, and then we're dropping off. Now, if we're gonna continue lower, there is no reason for us to invalidate this green candle. All right, there's no reason. So that's why at this time period, I told everybody, yo, I'm taking profits if we cross over the 50% of this green candle. And that's exactly where we took profits at. So once price crossed over the 50%, this is exactly where we took profits at. 50% of that green candle. And then lo and behold, looks like we sold the bottom, because after this, price got up out of there. And so this is what I mean. Let me show y'all in the 1 minute. It's probably faster. So if I was still holding, I'd be pretty annoyed. Like, they just took back literally, like, what is this, like over 60 points of the gains? Is it because the overall play, this is an 184 point play from our entry over here to where we got out at. This is 184 points or 760 ticks. That's how much we caught on this live trade here. But then we got out literally at the bottom by staring at what those PD rates. So like it's an understanding of what price delivery is expected to do at any given time. Like, once again, if we were going to go lower, we would not have invalidated that candle. So once price invalidated that candle, you see what happened. It used it on the other side, started pressing up to the upside, and the rest was history. As far as this deep retracement goes, I don't want to be a part of this retracement. I don't know about y'all, but I don't want to watch them, trade my freaking gains away like that. All right. And so, that's that. And so, like I said, we sold the bottom on that play. And then, man, I really want to and could break down the next section of price action that was caught that day, but I got to keep my eye on time, because I really, I could break down the other play. Let me know if I should do that. Let me know if I should break down the other play. Y'all let me know what y'all think, because I know I'm trying to keep my eye on time right here. I think I should just move on to the watch list section. Yeah, jacking that. Yeah, think so? You start with that. Just because D-Love said that, I'm here with you, because I know the feeling, and I'll be the same way, bro. So I got you. But I got everybody though, ultimately. Absolutely. Say that. All right, so, and then the watch list section, don't be mad if I talk a little fast on the watch list part though, because I gotta move past this part quickly. All right, so boom. Here we are. So when price made its deep retracement and then it rejected right here and started to break down, I ended up trying to short on this red price leg, and I ended up stopping at break even. Because I thought we were gonna come and run these lows. Why did I think we was gonna run these lows? Because of this. This is not how price typically moves when it's bullish. So I never believed in this rally anyways. I was like, oh, we probably gonna come down lower. I'm just waiting for my moment. Price starts invalidating bullish PD arrays and validating bearish ones. So let me actually hone in on this for a second so y'all can see what I mean. Look, when I noticed that price had rejected this bearish fair value gap, see, we came into it and rejected it. And then guess what? We made one, and we made, we barely made another one, but we did technically. But either way, I like what I see here. So when price comes up, and it's, I know, yeah, I tried on this price, like my fault. This is the price like I tried. So I see we rejected it. We created one. I took shorts to run these lows. Okay, cool. Things are going well. But without the continuation, I ended up stopping up break even. Cool. So I tried my hand here. Didn't work out. Didn't work out. Cool. We're waiting on our moment. Because I'm still not really convinced on this. But to me, everything, and when I say everything, I mean everything, depends on how we are going to trade with this 15-minute. Yeah, I ain't peeped that I changed time frames, huh? Look, you see this 15-minute bearish fair value gap. It all depends on this. I'm focused on this one. If this did not work, I'm gonna say right now, if this did not work, I would not be looking at this one. And I would expect price to move a lot higher. Okay. So it's not, I don't just pick any, there's a reason why I'm choosing whatever fair value gaps I choose. All right. So this is a very important fair value gap. So I'm looking at this one entirely. This is also on the YouTube video. If y'all haven't watched my last YouTube video where I passed the 50K top step challenge play by play, I took y'all through every single play that I took on that 50K top step challenge. I just did it for fun, just to show y'all like, yo, you could pass it without full porting the account or whatever, right? So I tell y'all, this is one of the plays I took on it. All right, so I kind of like break down the thought process on that, but I'm gonna actually do it from a different perspective than what I broke it down on YouTube, because on YouTube I showed you guys a lot of my 15-second process mixed in with my 1 minute. For time purposes, I'm gonna just show y'all this from a 1 minute perspective based on something we've talked about before. So boom, right? Y'all have a 15-minute point of interest. The 15-minute is supposed to take you, a 15-minute PD array is supposed to take you to the previous swing point. So a 15-minute bearish fair value gap is supposed to take you to 15-minute lows. So automatically, even if we took it from, let's say, 463 to the lows, that's already what, 100 and, I don't know, I said 463, 460. Oh yeah, that's 120 something points, right? So I'm looking at a potential 120 something point play there. So there's a lot of there's a lot of room here to make money. There's a lot of room to make money. All right, so look, you don't have to snipe the actual tippy top. Like once price gets to the blue area, once price gets to the blue area, you don't have to snipe the tippy top. You really don't. Let me remove this off of this time frame so we can see this clearer. All right. So yeah, bro, you don't have to snipe the tippy top. Y'all could wait for confirmation. So I'm about to show you the process of waiting for confirmation. This is what we were talking about in previous classes right here in the free community. 15-minute point of interest, confirm it on the 1 minute. What are we looking for in the 1 minute? We're looking for the 1 minute to not just invalidate bullish PD arrays right now. We're looking for it to validate or create bearish PD arrays. And so here we have this red candle. I'll be watching this because if price is spooling, it'll respect that. All right, so you notice what I say. If price is spooling, it'll respect that. Notice that price came into this red candle, and what did it do? It created a new high. So I'm not interested in shorts yet. Like, all right, I see that. I see what price is doing. We still bullish. Y'all know what y'all want to do. I'm chilling. I didn't just enter shorts inside of a 15-minute bearish value gap. Do you realize that if you just entered in here, your stop loss is from 456 to minimum, 499, bro? That's 43 points. You got a 43-point stop loss. Good. You better be sizing it with 1 micro and something like that. But this is not how I trade. No, I like to have way better risk reward than that. So I'm not somebody that says, oh, we in a 15-minute bearish value gap, I'm in shorts. Relax. I'm gonna look for a truly, I look for a 15-second PD array to get in on, but I'm gonna show y'all a 1 minute trader's perspective. So let's see what the 1 minute trader might want to do. We're in consolidation, so the 1 minute trader might say, hey, I'm not interested until we make a bearish fair value gap. Boom, dropped out of there. Now, if you are a 1 minute trader, you're looking at this to be respected. This 1 minute bearish fair value gap absolutely needs to be respected. Side note, I forgot to tell y'all why this didn't work out. Look at the time period that I was expecting a drop to happen in. So that's on me. This is right in smack in the middle of the lunch hour. It's a time, remember, it's time and price. So to expect them to make a big drop in the middle of the lunch hour, I'm not saying it never happens. We trade off probabilities. Probabilities wise, it's not the best time to look for a trade. That's why this didn't play out. And anybody who watched the YouTube video knows that this play ended up dropping off really hard. And I want you to look at what time did this start to happen. So we start, look at this. This is 1 o'clock. We broke this consolidation here at 1:13. Why? Because the lunch hour is over and it's time for the market to move. It's time to move again. Okay, so look when this actually happens. So boom, now that we made this fair value gap, this is the type of fair value gap that gets revisited. I said that on the video. This is not, I'm not saying this in hindsight. On the video, y'all heard me say in live action, this is the type of fair value gap that gets revisited. So I wouldn't be surprised to see price revisit it. All right, so price revisits it. It's consolidating on it, right? But ladies and gentlemen, I need y'all to understand why it's consolidating. So I'm gonna zoom out for a second so we can get a better picture. Let's get off the 1 minute. We got what we needed, which is the 1 minute fair value gap. Our play is based on this. So if you're somebody that wants to enter in the 1 minute fair value gap without confirming it with the 15-second, let me slow down. Y'all know what I said, right? If it's a 1 minute fair value gap, what you gonna do? You can confirm it with the 15-second. That's what I do. But you don't have to do that. If you want to just get in on the one, get in on the one. But anywho, if you want to get on the one, your stop loss from 429 to, let's just say, 444. So that's 15 points. I think 15 points is a lot better than 43, personally. So 15 points is solid. And if this was what your play is based on, you got in right here, somewhere inside of this blue area, and you never got stopped out. For the rest, you caught a huge move, because this is about to get real bearish. I'm about to show y'all in a minute. So first and foremost, let me make that clear. If you're a 1 minute trader, you just got into the play. But why the heck are we consolidating? That's what I want y'all to understand. We're consolidating because if you look at the 5 minute, once again, this is something I said on the video on YouTube. Make sure y'all check that out. I said it's on the video in live action. I said, yo, we're in between this bullish fair value gap and this 5 minute / 1 minute bearish fair value gap. And this is a highly probable 5 minute one, hence why you got a reaction from it, because it exists in a discount. That's why it's highly probable. And you have a highly probable bearish fair value gap. Why? Because it's the same one that got the reaction off of the 15-minute one. So we're already expecting this to work out to take us lower. But either way, we're in between sentiment. Like, man, we could go higher from here. We also could go lower from here. That's the perfect time to chop everybody account up, because you got so many people that went long right here and so many people that went short right there. So guess what we gonna do? We gonna chop them up. They don't know what's about to happen. We love that. If I was a market maker, I would be this evil as well. Understand? I would be just this evil as well if I was a market maker. So now, what you gotta do, you gotta pay attention to what PD rates being respected. I said it on the video as well. I said if we lose this blue area, what is the blue area again? Y'all forgot? 5 minute bullish fair value gap. In other words, 5 minute BTSMC. Okay, it's a 5 minute BTSMC right there. If we lose that 5 minute BTSMC, it's over with. It's over. So I said it on the video. Once we lost that joint, it was over with. It was over. Why was it over, y'all? Because this was the last line of defense for the bulls. So there's nothing else to stop us from running the heck out of here. If we did, yo, I'm telling y'all right now, bro, like this was the only chance the bulls had, was right here. It gave his best shot, this choppy move. But what we said about choppy moves, we don't believe it. We don't believe you. You need more people. Come on now. Y'all see what's going on. Y'all see what's going on. We ain't believing this move. And once again, nothing is in hindsight. It's all said on the live trade that's on YouTube right now. Like I was telling y'all, I don't believe in this up move. I think we're going to reject this area because I believe we're going to go lower. But you still have to respect this 5 minute BTSMC just in case. Because guess what? I could be wrong too, just like anybody else. But I'm telling you guys why I lean bearish. It's for all the reasons listed. So to put it in very short words, you have a very probable 15-minute bearish fair value gap right here that you're expecting to take you where? to 15-minute lows. Okay, so price comes into the area. What time frame do you look at? You look at the 1 minute in its time frame, because typically if the 1 minute starts making fair value gaps, especially fair value gaps that's getting respected, then that's showing you that the 15-minute idea is going to play out. We're going to go to the yellow line. If this fair value gap came and got respected how it did, it's very convincing that order flow has shifted bearishly. Because understand that right here, we're in bullish order flow. That's why bullish things were working out. All of a sudden, what starts working out? Bearish things. Bearish things start working out. Why? Because order flow has shifted. Understand me? And so people who are waiting for a change of character and all of that, where is their change of character? Well, they got to wait for price to close down here for them to get bearish. We already been in the play. We already knew what was going on from up top. We not even, that's why I don't like do traditional market structure. Like, I'm not tripping on that. I don't need, like, I already know what's going on in the play super early. I'm already looking to go short since up here. We already knew that. But then, yeah, the confirmation is going to come from that fair value gap. Boom. This is an entry. This is an entry, and the rest could be history. I don't even have to explain none of this because price just did what it had to do. Only thing I'll say is the fair value gap that I would watch for more downside would be that one. That's when I would watch for more downside. That gets invalidated, I would get bullish. So why do you think we went bullish here? And I did take this play as well. I took this play because of the time macro. Looking at the 250 macro. What time did this green move start? 250. That's all I'll say to that. What time did this move start? 250. Y'all see what's going on? Like, this is not by accident. And guess what? My mentees know it because I put it in the chat at 2:49 p.m. At 2:49 p.m. in the chat, in the mentee chat, I said macro. I said macro. They know what I'm talking about when I say that. Look at this, 250, price burst to the upside, and the rest was history. So yeah, money was made on this rally. So we caught the short and we caught the rally. And then that's the end of the day for real, because after that, it just chopped up. You know, it just chopped up top here, and it ended the day like that for real. That was it. All right, so, you know, we swiping it down again to the upside, like everything's caught, and just looking at signatures, is looking at order flow, and understanding what price delivery truly looks like on all time frames, and paying attention to both sides of the market. You got to pay attention to the bullish side, you got to pay attention to the bearish side. You feel what I'm saying? Can I get ones in the chat if something resonated with you on any of these breakdowns? Can I get ones in the chat if something clicked, or if you learned something? I didn't know, because this is a tricky area, as y'all can see, but I showed you how you could find your ways to snipe in it. Okay. Getting some ones in here. I appreciate y'all. And then, you know, okay, a whole lot of ones running in here. I appreciate y'all. And so, like, I'm glad that what I'm saying here is resonating. Appreciate you, growth only. And like, if y'all have questions on anything here, ask it after the recording. I have to move on now, especially for time purposes. But if y'all have questions on anything in this breakdown, ask it after the recording. That's why if you're watching this on YouTube, definitely join the free community. The link is in the description if you're watching this on YouTube, because it gives you the opportunity to stay on longer for the Zooms, ask questions after, ask questions in the chat, chop it up, whatever. So, but for YouTube, let's get straight to the watch list part of this class. I'm gonna try to go through that mad quick, and we'll take it from there. So we tend to look at the weather report, everybody. This is the weather report of the stock market, right? You want to look at the economic calendar, because price is not going to move unless it's time to move. You want to look at the economic events that is available in the market. And so we have here this week, the first week of September, is actually going to be pretty energetic, I feel, because we have PMI here on Tuesday, which is tomorrow. That one's decent. ISM is also decent. You might get some movement off of that, but really everybody's looking at the employment report. I'm telling you, this employment report is so extremely important, y'all, because right now, this month, the Fed is expected to potentially do their first rate cut. And so this economic report will help them guide that decision. Yo, is it time to cut rates or is it not? Imagine if this report shocks us then the Fed could change course and say, yo, hold on, maybe we shouldn't cut rates. That would, yo, that'll do damage to the market. So I think that the whole world is looking at this employment report right now. That's on Friday. Okay. And then typically non-farm payrolls, which is the employment report ultimately, is the most important event of the stock market. That's Friday. So I would say days before that, I do want you to be careful trading Thursday, Wednesday, and Tuesday. All 3 of these days, be careful. Price action can be pretty crazy on non-farm payroll week. But after the employment data is released on Friday, price action should be very, very nice. Very nice. All right, so that's that. Now, with that being said, let's look at DXY. So last week on DXY, I gave you guys this arrow. I'm expecting it to come into this daily SIBI next. I'm aiming for this. And so I'm bullish on DXY into this area. Once we get here, we want to watch time frames on the hourly, then the 4 hour as well. You can check out and see if it wants to move back to the downside. And I think it will. Right now, my bias is for DXY to make a move like this. I do think that's going to happen. But ultimately, I need to see what the candles look like as we actually get there, right? Because y'all know I need to wait for what? Confirmation. We just went over this. But ultimately, I do think DXY is going to reject this blue area. But either way, I'm bullish into it. And so for people who's trading Forex pairs connected to the DXY, then you want to definitely look at if DXY is going to be bullish, your Forex pair would probably be, you know how to trade for it. Y'all know, y'all going to be looking at the opposite direction. We've been looking at the 2-year. I looked at this earlier. I was wondering if this was a glitch, but it looks like it's not. I guess this is real. The 2-year, like, I guess it really gapped the heck up. I don't know why, but it really gapped the heck up today. Opening up here. I don't know what that's about, but y'all see this arrow been here. I told my mentees, I told you guys on the watch list as well. I do think the 2-year is going to bullishly react to this weekly BTSMC and then come above these highs. We consolidated. I kept this arrow here for a reason, because to me, that's a good sign that we're going to run higher is the consolidation right here. Because if we were truly bearish, then we probably wouldn't have hit this SIBI and then consolidated like this. No, if we were truly bearish, it would have did this, or it would have done this. It would have went immediately. It would have been bearish fair value gaps. Why is that? Think from the mind of a market maker. If this is supposed to be the top of a move, and you're a market maker, you need to think like, hold on. Why would we let these people into our play? Why would we give them time to enter our play? No, we need to shock the world. So if this is the top, it's going to remain the top. We're going to drop off really hard. All right, so the consolidation after hitting our target is why I felt, no, we're not done. We're going to keep moving higher. And so, we gapped up today. We'll see where it go. And people who've been here for some months now, y'all may realize that, or you guys may remember that we've been charting the 2-year accurately nonstop for many months now. Every area that you see drawn is something we said would bounce off of. Every area drawn, and then this is the next area we just drew, and so far so good. This was the target, this blue area initially. I said once we get here, we need to see what will come next. Then we talked about the purple area, and you see what's happening. All right, so this has been flawless charting on the 2-year, and it still just shows you that these technicals work in every market. This is the bond market, y'all. The technicals work in every market on every time frame. I showed y'all the 15-second. I'm showing y'all the monthly, show you the weekly. It's all the same thing on every market. I'm trying to tell y'all. So once you learn that skill, you can trade anything. You want to trade Forex, you want to trade commodities, you want to trade options. I don't care what you trade, bro. It's going to apply. So now let's talk Forex. Forex is in a tricky spot because DXY is in a somewhat of a tricky spot. Now, I'm going to do Forex a little bit and I'm going to move on. So Forex people, for Euro USD, I'm largely watching this red candle right here, except for something that could take us higher. All right, I'm looking at this red candle as something that could take us higher. If this red candle does not work, then I will probably get pretty bearish into these lows. All right, so a lot of for Euro USD is really dependent on this. If we don't even touch it and we just bounce from here, I mean, obviously that's self-explanatory, but this is a line of defense here for the bulls that I'm watching for Euro. For British pound on the weekly chart, the upper half of this fair value gap, I want bodies to hold the upper half of this fair value gap. So notice that we came to a monthly SIBI. This should say SIBI. Notice that we had came to monthly SIBI. British pound is another thing that we've been flawlessly charting. We took everything that happened British pound, we called it out, and we got to a target, which was this monthly SIBI. And so notice that we hit a monthly SIBI and we're reacting to it, but we have a weekly BTSMC here. And so you're in between opposite PD arrays. You have a bearish PD array and you have a bullish PD array. Which one do you think will win? I personally favor the upside right now, based on the fact that I favor downside on DXY. And so I'm betting more so on the weekly BTSMC. Plus, this is technically an order block. All 4 of these red candles make up a bullish order block on the weekly. That does not mean I'm looking at the entirety of that area. Personally, like I said, I'm looking at the upper half. I'm looking for bodies to hold the upper half of this purple to push back to the upside. All right, and so boom, that is British pound. And New Zealand dollar here, same vibe. I'm looking for the upper half of this weekly BTSMC. This weekly BTSMC is extremely important for New Zealand dollar. You don't want to see this get invalidated. To be honest, I don't even want it to get revisited, but it's cool. If it gets revisited, it needs to hold the upper half of it. USD CAD, same thing. Not same thing, really, actually. Remember we talked about this sweep? When price was right here, we said price gonna come over the yellow line, sweep it, and come back lower. Yeah, we caught, well, whoever trades Forex should hopefully have caught this whole move. And then now that we come down this low, do I think we bottomed out? I don't think we bottomed out. But something that's very important for me to see hold is this daily SIBI. If we don't hold this with daily bodies, then I think USD CAD will have a much deeper retracement into this range. So the most important area for USD CAD to hold its bearish bias is this daily SIBI. Okay, so that's major. And why do I expect it to hold? When I look at the monthly time frame, I think the monthly wants to come into these lows right here. When I look at the weekly time frame, I think the same thing. The weekly wants to come into those lows. Minimum come into this weekly bullish fair value gap. That's not the type of fair value gap I would expect price to like make a new high off of. It may do something like this. It may do something like that, but that's really it. But ultimately, I just don't think we bottomed out on this time frame. So being that if you see the weekly view, we have what? We have this bearish fair value gap right here. This is the important one, not necessarily this one and not necessarily that one. This is the important bearish fair value gap right now for USD CAD. So that's the weekly viewpoint. Now the daily viewpoint, you see that there's a daily one that overlaps the weekly one. Yeah, and when I look at it, I don't want price coming above this green candle. So if there's any place that I'm really looking for the rejection, it's going to be the blue area. I understand. So that's my point of interest on USD CAD for much lower prices. And USD CHF. Same thing. I think, yeah, we got to the monthly lowest body. I see why we like that as a target. Look, monthly lowest body. You see why we take profits there? Because that's where price be bouncing from. But lo and behold, I am looking for price to reject inside of this SIBI to go lower. Okay, so I'm looking at this one on Swiss franc here. This is a point of interest to me. If it's not this rejection, most likely it's going to run into these highs, but ultimately I wouldn't want to be a part of that. But this is where I would look for reversal signs inside of there. And last but not least, for Forex, usually JPY, I'm not the greatest fan of what's going on here, but I do believe that, I know we got the initial rejection and then it came to the halfway point of this wick. Let me show y'all that. It came to the halfway point of this wick. All right, so that's a target in itself, as I told y'all, and then it started pushing up. So there's a chance we could go bullish from here, yes, but I'm not necessarily giving up on this SIBI. We may even use this SIBI a second time to go lower. So that's something I'm watching. But ultimately, you may just want to wait for like some real confirmation before you take plays on this ticker. I would say that the upside and the downside both look pretty choppy. And so just the movement is something I'm not really a fan of right now. And maybe you just want to stay away and trade more probable tickers. But that's Forex right now. And one thing I'll say on crypto is something we're watching for crypto. I'm gonna just show you Bitcoin and Ethereum, and then we're gonna move on to futures. All right, so you see these highs. These are the all-time highs on Bitcoin previously. These highs right here were the all-time highs on Bitcoin previously. We ran those highs and then we consolidated. Anytime we run liquidity and then we consolidate after, you need to be aware of potential reversals. So we ran all-time highs and then we consolidated. That's a bad sign. That's not a good sign. We could consolidate before liquidity, but consolidating after running liquidity is always a bad sign. So that happened on Bitcoin, and simultaneously, guess what? When you look at Ethereum, they never ran all-time highs. Ethereum never ran all-time highs. That's a divergence. That's a divergence, as these things should be moving in tandem. And so that's one thing. Now, here's something that will tell us everything we need to know. We want to see, are we going to use this bullish fair value gap from the weekly to make a new high? It tried again, and it tried again, and tried again, and tried again, and it's just still consolidating that weekly bitch. And I told you, look, as long as Bitcoin is holding this area, I'm bullish on it. But the more we consolidate, the less, less I like it. But I can't tell everybody, I'm bearish on Bitcoin until we lose this area with a weekly body. Why am I looking for weekly bodies? Because we lost the area, don't you see? But it was a wick. Why am I looking for weekly bodies? Because it's a weekly fair value gap. I'm not looking for a daily. Look, the daily been closed under there. We ain't tripping on that. The daily came under there, whatever. The 4 hour came under there. Everybody, I'm not tripping on that, guys. Because it's a weekly fair value gap. So I'm looking at weekly bodies. That's it. I'm looking at weekly bodies. That's a point I wanted to make right there. But Ethereum had the exact same setup. I said I'm bullish on Ethereum as long as weekly bodies was holding it. Would you look at this? You see how weekly bodies was holding it at first? I don't think this is by accident, but what just happened last week? This is why I brought crypto up this week. Ethereum actually got a closure under that weekly fair value gap. Bro, I've been waiting on this literally since March, or April, or whatever time period. We've been waiting on this for so many months now. And we finally got the weekly body to close under the fair value gap. So now my eyes are really looking at crypto, because I think that if we get Ethereum to lose these lows, man, it's not going to look good. It's not going to look good for crypto, in my opinion. If Ethereum could lose these lows. Now, obviously, Bitcoin is still holding the fair value gap, but now that Ethereum finally lost it, I'm very interested to see where crypto goes from here. So I would say, depends how you look at it. You can say that because of the invalidation. A question in chat says, is that considered a change in the state of delivery? And it's like, you could look at that as basically we invalidated the most important thing we would need for bullishness, which is this. Basically, we finally invalidated it, and simultaneously we have respected, if you're watching both sides of the market, we're respecting a bearish fair value gap, And so it's like, that's very interesting. So I think a lot depends, like, how are we going to deal with it? We're on the daily now, on the daily chart. How we deal with this daily fair value gap is also something I'm watching. If we reject this, if we end up rejecting this and coming down hard, like, I'm telling y'all, man, look out below, look out below. So very interested in crypto right now, but we'll see. So that's those. Now let's go to futures. Cause I got crypto traders in here, Forex, I got everybody in here. It's a party in here at BTSMC, but let's go to what I trade the most, which is NASDAQ. So, all right, man, I know it looks noisy on my chart right now. That's because I'm on a monthly time frame, so just forgive me. But if you could see through this noise, matter of fact, let me not even do that. Yeah, let's go like this. Okay. So on the monthly chart on the NASDAQ, you can see this long imbalanced wick. Why is it an imbalance? Because these type of wicks is an inefficiency in the market. Like, we don't typically leave those. So I wouldn't be surprised to see us trade down into this wick more. The deeper we trade into this wick, the better it is for a bear. A bear wants to see us trade deeply into this wick. All right, a bull wants to see us trade to maybe the 25% of this wick and then continue higher. And so I want to see us trade into this wick, but I want to see us like really destroy it. Now that doesn't have to happen in the first week of September. Remember, this is a monthly time frame. We could come up first and then come down second, which is actually what I expect to happen, by the way. So we could come down, we could go up first before coming down, but I do feel like we're going to end up addressing this wick during September. But we'll see. So that's the monthly chart. Now looking at the weekly, what had happened here? Price came down. Oh, let me go to the chart that I actually trade now. And it's funny how you see like, yo, that's funny. Hold up. I didn't peep that until now. Hold on. This is the contract chart. We came to the lowest body here. Why on the continuous chart, we did not even come to the lowest body? That's so funny. I guess when B adjust is on, that's what it is. When B adjust is on, see B adjust on the bottom right? When B adjust is on, we came down lower. But when B adjust is off, we never actually came to these lows. That's funny. That's funny to look at. All right. Anyways. So actually, let me tell y'all from here. Let me use this chart still. So we came to these lows. Y'all seen that we obviously didn't want to go lower. Now we push up hard and we make a bullish fair value gap. This fair value gap is extremely important, as I told you guys last week. What existed inside of this weekly bullish fair value gap? This very important daily fair value gap. See? And guess what? When it comes to this weekly one, what did I tell y'all? I want price to hold the upper half. So why am I focused on this daily fair value that I drew here? Because it exists in the upper half of the weekly. So you see how you're using all time frames to kind of tell you a story. I didn't want price coming down here. I actually said if price starts coming down here, I get bearish on the NASDAQ. So for the NASDAQ to go higher, I actually need this area to hold. So on the daily chart, as y'all see, I'm only focused on this fair value gap. I said I believe price will go bullish off of this fair value gap. All right. It's a daily fair value gap. So what do we need to hold? Don't forget, y'all, we need daily bodies to hold the area. And the daily bodies hold this area, yes. Okay, so therefore I haven't switched sentiment until we lose this area. I'm not switching sentiment. And so I remain bullish. My mentee asked me the other day, yo, Rel, like we're down here now. Like, are you still bullish? Yes, I'm still bullish as long as bodies are holding this area. If it loses it, I'm cool with switching biases. I want the market to go down. I believe it's actually to go down soon. I just think it's gonna run higher before it goes lower. That's my personal belief, but we'll see, right? There's a lot to be determined before that. So as y'all know, y'all can see we're in a crazy consolidation, but we've technically been holding this area. If you look closely, you'll see that really we came under for this VI right here, right? That is what we came under to touch to the exact tick, right? That's an inefficiency as well. And so that's what this down move was, to come into this VI as it's an inefficiency, and then we push it. Okay. D-Love, I'm gonna try to answer that after. But yeah, so here we are. I'm looking for this to run higher. Now, where's my target right now for the NASDAQ? I just want to see NASDAQ come into this weekly fair value gap. Typically, I would never be looking at this fair value gap to potentially reject price. The only reason I think it has a potential of rejecting price is because I don't feel like we're done with downside for real. So bearish PD arrays on this price leg, such as this bearish fair value gap, are interesting to me because I just don't feel like we're done. I feel like we engineered liquidity here. I feel like they set up relatively equal lows to come and take that. I'm very suspect on the upside right now. So I'm interested in this because it has potential to reject us back to the downside. Now, if it doesn't, and we make an all-time high, okay, that's fine. The only how I'm even taking shorts out of here is if I get confirmation anyways. What's confirmation, Rel? Well, this is a weekly bearish fair value gap, right? So what I would want to see is price coming to this area. And what time frame would I watch? The 4 hour. If the 4 hour comes out of here strongly with 4 hour bearish fair value gaps, simultaneously invalidating any 4 hour bullish fair value gaps, that is what confirmation will look like to me. And I will believe that we're going to make a strong move to the downside. But if we come into that blue area and price do something like this, I'm not convinced. That ain't it. We're gonna end up running higher. It needs to be a strong like reversal. Fair value gaps included, not sold separately. All right, so that's my analysis on the NAS. I already told you on the daily, we still looking to see this hold. I'm expecting upside early on in the month, and then but we'll see. And then for ES here, Y'all can see this same thing. I said the same thing for ES. We was focused on this daily bullish fair value gap. You can see that bodies held it as we needed bodies to hold it. VI included, not so separately, VI included. And we made a higher, technically we made a higher high with this wick, right? Very technically, but like we'll see how it goes. But either way, the goal is for that daily fair value gap to make us go higher. Now, what else was it simultaneously? And this is why I need you guys to, when you're building your watch list, look at all time frames. What did I write here in the yellow? Weekly BTSMC opening. Why? Because this is a weekly bullish fair value gap. See? So price barely touched it, but it touched it. See, weekly bullish fair value gap. That's what we went bullish off of last week. So you can see it from a weekly perspective, where institutional order flow entry drill right here. You could see that, or you could look at it from a daily perspective and say, yo, bodies held the bullish fair value gap. Now, let me show y'all real market structure. Real market structure, without even saying too much on it. One thing I'll say is this is why I don't do traditional market structure. Okay, because traditional market structure will tell you that we're bearish when this happened. See, we got a closure under these lows. So traditional market structure is telling you we're bearish now. That is a change of character. We need to go to the downside now. That means that anything to the upside is gonna get, sold off. Any rally is gonna get shorted. I don't care about traditional market structure. Y'all know what my analysis was. I'm looking at if bodies is holding this, I'm good. I'm expecting us to go bullish here. So when price does this, right? Price does this, and we close above these highs. This is what I would call an important high. This high is important. This high is important. In the free community, I told y'all, I say, yo, ES actually gave us a valid structure shift. So now we apply the logic and say, yo, any sells will get bought up. Any dips are gonna get bought because we're actually bullish. This is the important high. This low is not important. This is not an important. This is an important high right here. So now, guess what? Price drops off into what? The 4-hour fair value gap. Yeah. Why you think this 4-hour fair value gap worked out? Why y'all think it worked out? It worked out because we had shifted bullishly. All right. We had shifted bullishly, and then that's exactly where we are right now. So we'll see if it continues. We're obviously still in consolidation, but this 4-hour fair value gap all of a sudden becomes more probable. Why? Because we were actually bullish based on the closure over these highs. That's real structure. That traditional market structure is not it. I'm gonna be real, it's not it. But all right, so boom, that's that. Now YM, similar vibes, man. I mean, they continue to run higher. There's not really much to say. We were bullish on them running over all-time highs. They actually did run all-time highs. Technically, they did run above that red wick slightly. But yeah, I mean, I don't like the movement, so I wouldn't be surprised to see, like I said, September may do this at first, but I wouldn't be surprised to see price come down at some point this month. So my eyes are open. Nothing much to say about the Russell for real. After we ran the liquidity that we had targeted, we made this choppy move up. We're still on that choppy move. This same BTSMC got used in verse, and we'll see what happens. But it's not really much to say. There's no real setup I like on the Russell, so I'm not even gonna really talk about it. For time purposes, I'm actually gonna skip my Nikkei analysis for time purposes. I gotta get this moving. CL, we were looking for CL to come to this yellow line. We got a strong move, but we fell short of that objective. Am I surprised that my analysis on CL did not deliver me to these highs? So we had a strong start. I mean, after the watch list last week, we had this reaction, right? This green price leg still made people money. Of course, yes, money was made, but the target was the yellow line. It did not get there. Am I surprised? Like, am I like, yo, my gosh, I don't know technicals? Like, no. Because I told you guys, the warning on CL is whenever the higher time frame is in chop. Look at I'm on the monthly. This is the monthly. Whenever the higher time frame is in chop, look at the weekly. Whenever the higher time frame is in chop, everything under it becomes lower probability. So typically, after hitting the lowest body here, and having no fair value gaps, I would target the highs right here, typically. And we may still even get there, but I have no clue because we're in consolidation on every time frame. And that's why I just say it's low probability conditions, and that's why CL is not an interesting ticket to me. This was a setup that seemed to be pretty easy, and it's not even fully getting to its target. Why? Because the oil right now, it looks like this. This ain't it. All right, so that's why you stay away from low probability conditions, because what you know to be true on a probability basis probably won't play out, because guess what? You're in low probability conditions. So how do you know that? Look at the weekly, look at the monthly, and let it guide you. Weekly and monthly not doing much. All right, be careful trading daily analysis. Be careful trading 4-hour analysis. Be careful trading that. All right, that's why I've been staying away from gold. Look at gold. This is technically a bullish OB. I mean, we got a nice reaction. Price came into, most of this wick, but it's just chopping around. August vibes. That's what August looked like. But as I'm telling y'all, I wouldn't trade gold, because look at the weekly on gold. Look at the monthly on gold. Wicky, nasty. So when a higher time frame look like this, I just rather not trade it. There's so many tickets that don't look like that. Why would I stress myself? Now SPY did the same thing that ES did. As I said on SPY, this fair value gap is the most important one. We consolidated on it. I'm cool with us consolidating prior to running liquidity. I don't like when we consolidate after. I don't want to consolidate up here. If I'm bullish, I don't want to consolidate up there. But if I'm bullish, I'm cool with us consolidating right here, as long as we continue to hold what we need to hold. So you see, you think it's a coincidence that this red body stayed on top of the 50% like that? I don't think it's a coincidence, right? Let the bodies tell you what's really going on. And so even with this being said, I do expect us to make that all-time high. We're so close to it. I would be surprised to see us not run that. So yeah, yeah, I got my couple of mentees in here. Y'all love gold. I don't know why y'all do that. I'm not touching gold when it look like that. I'm good. But for QQQ, same vibes, man. They look the same as NASDAQ, where we came into this weekly BTSMC and we're reacting well to it. I'm looking for price to come into this daily gap next. So, literally same thing that I said on those tickers. I think there's a couple option tickers I'm gonna show, literally like maybe 2 or 3, and then I gotta cut it. So, and I think it's really just for teaching purposes, which is mainly just to show you guys that here we had a monthly BTSMC on Adobe, and we want to see price go bullish from there, right? That's something that we talked about many watch lists ago, Adobe's monthly BTSMC. What happened after we hit that? We ended up making a weekly BTSMC. Why was it important for us to make this weekly BTSMC? Because it's going to be a line of defense. So notice that, I know we haven't talked about it in a while, but look what happened with this weekly BTSMC that was created. Now we're going bullish on it. Order flow definitely seems to favor the bullish side right now, and I would expect continuation into monthly highs. I mean, a monthly BTSMC should get us to monthly highs, right? So Adobe, I would expect to continue into at least these monthly highs, minimum, just because I like how the weekly's reacting. The daily, everybody looks really good right now for some continuation on Adobe, and so we'll see how that goes. AMD, I want to talk about AMD a little bit. So I said prior to AMD and Nvidia's earnings, I'm looking for them to go bullish after earnings. Why? Which obviously they had bearish earnings, but I'll tell you guys why I was looking for bullish earnings. Look at AMD here. So this BTSMC with this bullish order block, everything here looks really good for upside. This move is really choppy to the downside, so it's not really believable like that to me. And when I look at the weekly chart, I noticed that we had reacted to this monthly BTSMC and created a weekly BTSMC. Now price was dipping into this right before Nvidia had earnings, so I'm like, all right, I think we could use this weekly BTSMC to go higher. Now of course, after Nvidia's earnings, yeah, there was some red days and all of that, but we're still holding the inefficiency. So yeah, it didn't happen on earnings, but I like what I see here. Still, nothing has changed on my AMD and Nvidia analysis, just because like they're still holding what I need to hold. Yeah, earnings was bearish, but yo, my analysis is based on this BTSMC. If this BTSMC gets invalidated, I would change everything. Yeah, I would change analysis. But as long as we hold in this weekly BTSMC, I don't see any reason for me to get bearish on AMD. Like, look how we choppily moved into it. I told y'all, anytime we choppily move into an inefficiency or a PD array, that's not a good sign. Typically, that means it's going to end up working out. We'll see. We'll see, right? We rejected a weekly SIBI and we're reacting to a weekly BISI. What did I say causes choppy conditions typically? When we have a valid bearish PD array and a valid bullish PD array, and we're smack in the middle of it. That's exactly what's happening with AMD. And so we'll see what happens next. You know, one of these fair value gaps is going to win the battle. We'll see. I favor the upside for right now, but we will have to see. Bath and Body Works is something. I'm not even going to go over that for time purposes, but many watch lists ago, I talked to y'all about shorting Bath and Body Works, and it's working out. I just want to show you that it's working out. It's been a pretty nice sell-off. You know, bearish PDAs are working. You know, you had this bearish OB, price rejected, came up, rejected another one. Right now for Bath and Body Works, it's so late into the move, I almost don't want to talk about it. But what I will say is that I would look at this bearish fair value gap. If price rejects this and rejects it hard, then you may see continuation into $25. All right, so a lot depends on this. If it does not reject this fair value gap and it comes up higher, I would just stay away from Bath and Body Works and out, because they're most likely they're gonna have a deep retracement, and it's just like, this is the tail end of the move. We've been talking about this move since it was up here, right? So we're at the tail end of the move to where it's just like, forget about it. I wouldn't even recommend trying to hop in something so late. But if it rejects this, that's just a sign that it's super, super weak. This fair value gap will tell us that it's super, super weak. So, you know, I would look at this one. And that's it. And that might be all I talk about for real. I know I got a request for NVIDIA, so I'll just do NVIDIA real quick, and that'll probably be it. All right, so NVIDIA, plus it helps me talk about what I was expecting on earnings. So for me, for NVIDIA, as you guys see, it's been spooling, right? Meaning it's been aggressively moving in one direction, Every time we're spooling, we react to the nearest PD array. Look, this reaction is the nearest BTSMC. Boom. We just retraced just now into the nearest PD array, which is this monthly bullish fair value gap. Okay, we're reacting to it very well. So when I seen that heading into earnings, that's why I said I think NVIDIA is going to go bullish. Plus, this is the weekly chart. It's the weekly chart heading into earnings. We had come into a weekly bullish fair value gap. See? NVIDIA came into a weekly bullish fair value gap. So do you see why I said on NVIDIA's earnings, I'm expecting them to go higher? They did not go higher on earnings, but they're still inside of the PD array that gave me bullish analysis. So I'll say the same thing I said on AMD. As long as price is holding this weekly bullish fair value gap, I still favor NVIDIA moving back to the upside. This looks like a potential AMD situation for me, not Advanced Micro Devices, not AMD the ticker, but AMD the setup we talk about. That, right? Accumulation, manipulation, distribution. That's what that looks like to me potentially. What will tell me if it's true is if we invalidate this daily VI. So I would draw this exactly like this. If a daily body closes above here, then NVIDIA should be able to see its way to all-time highs. So I will watch this area. If it keeps dropping, that's self-explanatory. All right, and so that's all I had right there. Pretty long class, but a whole lot was said. I hope that you guys you know, got a lot out of this class basically. And yeah, if you're watching this on YouTube, click the link in the description so you can join a free community. There's also links to different prop firms inside of my description box, so make sure y'all check those out. Get y'all evals, get funded, get your payouts, get paid, get money with us. All right, so this is BTSMC, and that's all she wrote.